now on Module 6, entitled PFRS for Small and Medium-Sized Entities. No? And we got this learning objective. We have to state the basic purpose of issuance of this PFRS for SME. We got the nature, the concept, the principles, the practices in SME's operation, and provide the distinctive differences between the full PFRS and PFRS for SMEs. And then now we got this only topic. We have the small and medium-sized entities or SMEs PFRS, and the overview of these topics is the provisions of PFRS for SMEs that relates to financial accounting topics are discussed, and those are related to advanced accounting are included in the advanced accounting part 1 and part 2. So this is for only for a general or financial reporting. And the purpose of this financial reporting, Philippine financial reporting for SMEs, is develop a separate or standalone standard intended to apply to general purpose financial statement of small and medium-sized entities. The PFRS for SMEs is only the minimum standard that qualifying entities needed to adopt for the preparation and presentation of the financial statement, such as SME may be reverse up to adopt the full PFRS. Then, authority of the PFRS for SME in the Philippines, based on SEC guidelines, the PFRS for SMEs shall be applied by corporations that are not publicly listed, do not hold assets in a fiduciary capacity for a broad group or outsider, and have a total assets of between 3 million and 350 million or a total liabilities of between 3 million and 250 liabilities. So if you are within this area, then you could use PFRS for SME. But if it is not, you are not within, then you are required to use the full PFRS. Micro entities. Entities that have total assets or total liabilities below 3 million, so-called micro entities, may use another acceptable basis of accounting. However, a micro-entrepreneur entity may nevertheless elect the application of PFRS for SME or even the full PFRS if it chooses to. So they could use also. And then other acceptable basis of accounting we have for micro entities may use the following basis: with income tax base of accounting or a cash basis of accounting. The transition to PFRS to SMEs. On initial adoption of PFRS for SME, an entity shall apply the size criteria using the entity audited financial statement for the immediately preceding financial reporting period. The transition from this, the entities ceasing to qualify as SMEs shall adopt the full PFRS unless they qualify as micro entities. If an SME that uses PFRS SME ceases to qualify as SME because it either exceeds the ceiling or the size of criteria or falls below the floor of the size criteria, such entity may transition to the full PFRS or another acceptable accounting basis on the next accounting period. To warrant change in the financial reporting framework, the increase or decrease in the size criteria must be judged to be significant and continuing. As a general rule, a change of 20% or more of total assets and liabilities would be considered significant. No? The overview of this PFRS for SME, most of the concepts included in the PFRS for SME are similar with the concept provided in the full PFRS. This is because the PFRS for SME is just a simplification of full PFRS, which was intended to ease the difficulty of SMEs in applying and implementing the generally accepted financial reporting framework. The full PFRS versus the for SME. First, we have financial statement presentation. The number one is that non-presentation of additional balance sheet. PAS, for the full presentation of financial statement requires the presentation of additional statement of financial position at the beginning of the preceding period when an entity applies an accounting policy retrospectively, make a retrospective restatement of items in all financial statements, and when it makes reclassification of adjustment. But for SME, it does not require the presentation of such additional statement of the financial position. So, this is the first difference. Does not require in the SME, but in the full it requires. Then number 2, option not to present statement of comprehensive income. So in PS1, the comprehensive is always presented when an entity prepares a complete set of general purpose financial statement, either a single statement or one of the components of two statement presentation. But for SME, if an entity has no item of other comprehensive income in any of the period in which financial statements are presented, it may present only the income statement, or it may present a statement of comprehensive income in which the bottom line is labeled as profit or loss. So, no more comprehensive. Recognition of revenue from contracts with customer. In full, PFRS 15, revenue from contracts with customers are require the application of 5-step principle when recognizing revenue from customer with the customer. But with SME, requires a simpler principle of transfer of significant risks and rewards in the revenue recognition. So, in the contract with customer, you need to have the 5-step, and then for here, you just need to transfer of significant risk and reward. Then, next is components of other comprehensive income. So for PSS, we have to consider this following comprehensive income: the change in revaluation surplus, unrealized gains and losses, and change in fair values of instrument. And then we have remeasurement of net defined benefit liability, gains and losses arising from translating financial statement to foreign operation, effective portion of gains and losses, and hedging instrument in a cash flow. But for PFRS SME, enumerates the following 4 components of other comprehensive income. We have the changes in revaluation surplus, some actuarial gains and losses, some gains and losses arising from translating the financial statement into a foreign, and some changes in fair values or hedging fund. Unrealized gains and losses for FBOC are not included because classification is not available in Quan. So means to say number 2 are not part of the PFRS for SME. Then, option not to present a statement of changes in equity, or option to present a statement of income and retained earnings as per PS 8.1 requires that the statement of changes in equity shall always be presented when an entity prepares complete set of general purpose financial statement. So PS1 does not include an option to present a statement of income and related earnings. But PFRS for SME allows an entity to omit the statement of changes in equity and in lieu therefore present a single statement of income and retained earnings if the only changes to equity during the period for which financial statements are presented arises from profit and loss, payment of dividends, corrections of prior year periods, errors, and changes in accounting policy. The changes listed above exclude transactions such as issuance of shares, acquisitions of treasury shares, and the like. So, the statement of change, income and retained earnings are not requirement in full PFRS, but for SME they are part. So in lieu of the other sets of financial statements. Then number 6, non-current assets held for sale. Under PFRS 5, non-current assets held for sale and discontinued operation, an entity shall classify a non-current asset or disposal group as held for sale if its carrying amount will be recovered principally through a sale transaction rather than through continuing use. The proper dividends in the form of non-current assets are classified held for distribution to owners if the assets qualified under the criteria on PFRS 5. In PFRS as for SME, no similar classifications are provided under PFRS for SME. So, non-disclosure of operating segment information and earnings for sale. So, there is, PFRS, operating segments, and PS 33 earning per share require listed entities or those in the process of listing their securities for purposes of trading in the public market to disclose segments information in these notes and earnings per share on their statement of comprehensive income or income statement if presented respectively. And for SME, does not apply to listed entities. The PFRS for SME does not require disclosure of segment information or earnings per share. Entities making such disclosure shall describe the basis for presenting the information. So, interim financial reporting for full. There could be interim for SME and full PFRS. Then, condensed financial statement. Interim PS 34 interim financial provides guidance in the preparation of condensed financial statement presented for interim period. For SME, does not include similar provision. Financial instruments. Under PFRS 9, financial instruments are classified as either fair value, amortized cost, entity's business model, or the contractual cash flow characteristics of the financial instrument. Under SME, financial instruments are classified as basic or non-basic. The basic financial instrument refers to non-complex financial instrument. The basic financial instruments are subsequently measured using the amortized cost method, except for those are publicly traded or whose fair value can otherwise be measured reliably otherwise without undue cost or effort, which are measured and the fair value. And then, classification of the financial instrument. Entities are permitted to classify equity securities that do not qualify as held for trading to be measured at fair value through other comprehensive income. And then entities are permitted to designate financial assets to be measured at fair value through profit and loss if doing so eliminates accounting mismatch. For SME, non-basic financial instruments are subsequently measured at fair value through profit or loss, except for those whose fair values cannot be reliably determined without undue cost or effort, which are permitted to be measured at costless impairment. So, the fair value through other comprehensive income classification is not permitted under this SME. And the SME for paper does not include an option to designate financial asset at fair value through profit or loss. For investment in associates, choose of accounting policy on investment in associates. PS 28 investment in associates and joint ventures requires the use of equity method in the accounting for investment in associates. Under PS 27, separate financial statement and the investment in the associate accounted for as separate financial statement at cost equity accordance with the PFRS 9 fair value. For SME, and associates are accounted for using of the following cost, equity, and fair value method. Then, implicit goodwill on acquisition. Under PAS 28, goodwill relating to the associates is included in the carrying amount of the investment. There is no separate accounting required for the implicit goodwill. Neither amortization nor separate impairment testing of the goodwill is permitted. For SME, under this, excess of acquisition cost of the investment in associates over the investor's interest in the next fair value of the identifiable assets, liabilities, and contingent liabilities shall be recognized as goodwill and shall be amortized over the period. Then, if the useful life cannot be established reliably, the life shall be determined based on management best estimate but shall not exceed 10 years. The different reporting periods under PS 28, the difference between the end of the reporting period of the associates and that of the investor shall not exceed 3 months. Pero in PFRS SME does not include similar provision. For bidder plans are excluded from the scope of PS 41 and are classified as PPE in PS 16. No equivalent provision for SME. Measurement, PS 41. Agriculture requires the measurement of biological asset at fair value less cost to sell. There is a rebuttable presumption that fair value can be measured reliably for a biological asset only when the presumption is rebutted on initial recognition that an entity is permitted to measure its biological asset at cost less accumulated depreciation and accumulated impairment losses. Under SME, an entity shall measure a biological assets on initial recognition at its reporting date of its fair value less cost to sell only when a fair value is readily determinable without undue cost or effort. A biological asset whose fair value is not readily determinable without undue cost or effort shall be measured at cost less any accumulated depreciation and accumulated impairment. For intangible assets and other than goodwill, under PS 38, under intangible assets, research and development costs are generally expense. However, development costs may be capitalized as intangible assets if certain conditions are met. But under the PFR for SME, research and development costs are recognized as expense in the period incurred unless they form part of the cost of another asset. For SME, it does not provide condition for the capitalization of development costs. Amortizations of intangible asset. PS 38, only intangible assets with finite useful life are amortized. Intangible assets with indefinite useful lives are not amortized but tested for impairment at least annually. For SME, all intangible assets shall be considered to have a finite useful life. The useful life of an intangible asset shall not exceed its legal life. If any, the life of the intangible assets cannot be established reliably, the life shall be determined based on managed best estimate but not to exceed 10 years. The annual review of depreciation amortization method, useful life and residual value as per PS 16 and 38 for full PFRS, an entity to review at least each financial year end and depreciation amortization method, useful life and residual value of its PPE or intangible assets. As if there are changes, the entity shall account for a change as changes in accounting estimates. For SME, an entity shall review the depreciation amortization period, useful life and residual value of the PPE or intangible assets only if there are indicators that there have been changes since the most recent annual reporting period. So, these are the differences between the two. Then, accounting for goodwill. PS 36, impairment of assets. Goodwill arising from business combination shall not be amortized, but rather tested for impairment at least annually. Not like before, it is amortized, but for now, there should be no amortization, but there should be impairment testing. Under the SME, initial recognition, the acquirer shall measure goodwill acquired in the business combination at cost less accumulated amortization and accumulated impairment loss. If the useful life cannot be established reliably, the life shall be determined based on management best estimate but not to exceed 10 years. So, government grants. Classification, recognition of government grants. For PSA 20, accounting for government grants and disclosures of government assistance, government grants are classified either grants related to assets or grants related to income. Under PS 20, the government grants is recognized in income over the period necessary to match it with the related costs for which it is intended to compensate on a systematic basis. If the cost for which a grant received is intended to compensate have already been incurred, the government grant is recognized as income at grant recognition date. So, at recognition. But for SME, under this, a grant that does not impose a specified future performance condition on the recipient is recognized in an income when the grant proceeds are receivable. A grant that imposes a specified future performance recognizes income only when performance conditions are met. Grants received before the revenue recognition criteria are satisfied are recognized as liability. Measurements of government grants as per PSA 20. Monetary grants are measured at amount of cash received, fair value, and amount received, of amount receivable, carrying amount of loan payable to the government for which repayment is given, or discount on loan payable to government at below market rate of interest, while non-monetary land and other resources are measured at fair value of non-monetary assets, alternatively a nominal amount or zero plus direct costs incurred in preparing the assets for its intended use. For SME, no alternative measurement basis is provided under this, but it should be at fair value. Borrowings. PAS 23 borrowings costs that are directly attributable to the acquisition, construction, production, qualifying assets forms part of the cost of the asset, or it's capitalized. Other borrowings are recognized as expense. For SME, borrowings costs are recognized as expense in the period they are incurred. Impairment. Under PS 36, impairment of assets when computing for value in use, cash flow projection shall cover maximum period of 5 years, unless a longer period can be justified. A cash flow projection beyond 5 years limit shall be extrapolated. For SME, under PFRS of this SME, the entity may wish to extrapolate cash flow projection beyond the period covered by the most recent budget or forecast. Employee benefit. Under PSA 19, employee benefit, the obligation under a defined contribution plan are measured on an undiscounted basis, except when they do not fall due wholly within 12 months after the end of the period in which the employees render the related services, in which case they are discontinued. So, under defined contribution plan, they need not be discounted. For S19 requires the use of projected unit credit method when measuring its obligation on defined benefit plan. In SME, projected unit credit method shall be used only if the entity is able to do so without undue cost or effort. Then, declaration of dividends after reporting period. Dividends declared after reporting period but before financial statement issuance are not recognized but disclosed only. For SME, dividends declared after the reporting period but before the financial statement are authorized for issue are not recognized but disclosed only. However, for SME, provides the entity an option to presenting the dividends as a segregated component of rated earnings end of the reporting period as an appropriations of rated earnings. The PS24 related party disclosure are required to disclose key management personal compensation in total and each of the following: short-term benefit, post-employment benefit, other long-term benefit, termination benefit, and share-based. Under SME, key management personal compensation in total only. So this is now the end of your module. Thank you. Do the activities in every module and with a given period. Please review, because the next week we are going to discuss review on the module 4, 5, 6, and we will be preparing ourselves with our final part 2 examination to be given in your G class, or to be given in online with a time pressure. We are now finished with our financial accounting intermediate accounting part 3, and I hope that you enjoy the presentation, and I hope you understand the presentation. Any question that you want to ask from me, you may do so in week 8.